This is our Forex blog for Friday, July 18th, 2014. These are our currency indexes, which let you see visually what each individual currency is doing. Most people are very excited about our Forex signals. We are now up to 478 different patterns that I look for. Here's the euro dollar on Friday, where you can see a narrow range breakout right here, which fell from 20 down to 95. Nice 25 pip move. We bought the low right here at 95 and got out right here for a nice 14-15 pip win. Short right here with a very tiny loss, and then short at the end of the day, where we basically would close at the end of the day. Here's the pound dollar. I only had 2 trades, but with trades as big as this, you certainly are not going to complain. Here is your risk. This is how much we made on that trade. Here is your risk on the buy. This is how much we made on that trade. And anytime you have trades that are making 5 to 10 times more profit than what the risk is, you're going to do very well trading. And a lot of people trade the yen pairs too, so I'll just show how the euro, yen, and pound yen did. Short right here, pretty much break even. Short here, 3 or 4 pip loss. Short here for maybe a 10 pip win. Bought here for another 15 pip win. And the previous day it did pretty good too. Win, pretty much break even, loss, 5 pip win, 20 pip win, break even, 20 pip win, small win, 15, 20 pip win, break even. And here is the pound yen. Small win, huge win, little mini double bottom. And when this is what's so amazing about our system is that we actually look for patterns, W patterns and M patterns, very high probability, little mini double tops. A normal double top is when the market comes up and multiple hours go by and it comes up and hits it hours later usually. M and W patterns are pretty much double tops, double bottoms within a short amount of time. And they're very excellent when the market is up or down statistically too much. Very high probability, low risk counter trend trades. And they also oftentimes let us get out of trend trades at the optimal level. Now, if you don't want to trade our signals, which it's, in my opinion, pretty silly not to, with 478 patterns in there now, I'm spending the majority of my time fixing some of the older ones, putting in our newer methods into the old patterns and making them much more strict. If they only give 2 trades a year, I don't care. I want super strong, high probability trades, and anything that's not high probability, I'm putting in extra rules where basically it might only find a few trades a year versus having a couple losses every day or every week, which they initially did, and now I'm adding new rules and improving them. The currency indexes make it very easily to discretionarily trade. They let you see what each individual currency is doing. You can see double tops, double bottoms. You can see when the upper and lower bands get hit, which most of the time price bounces off of. For instance, if you wanted to buy the euro when it's underneath the lower band and when it came back in above the previous day's low right here, it's not a bad place to be buying at 9.20. And which currency maybe is up too much at 9.20? Well, the dollar. The dollar's at the upper band, likely to come down. The euro's at the lower band, are likely to go up, and that's around 9.20. Here is, our signals, which we actually happen to buy this. This is a new trade type I put in there, trying to buy at the S3 and sell at the R3 pivot level. But at 9.20 you're looking for a buy. This thing's come down a lot. It's very likely at the fib target of this last wave, which I'm not actually even using in this particular trade type, but if you're manually trading, you can draw and use all of our drawing tools to add to your probability. Very high probability place to get in, and because it's down too much, you're very likely to get 20-25 pip bounce off of it, and you also kind of know ahead of time where your likely profit is. If you draw your fibs off of this last day's high and today's low, it's likely to come up to the 50% retracement. So even before you pull the trigger, you kind of know your risk is this. This is your likely reward, and the reward is about 3 to 4 times more than what your risk is. And anytime you can find a trade that's probably 60 to 80% likely to work, and it's likely to give you even 2 times bigger reward than what your risk is, you got to pull the trigger. So our currency indexes and our currency meters really add to your probability. And when you take our Forex signals in currencies that are likely to bounce, you see a buy trade, and your own analysis also tells you it's likely to bounce at that area or even higher probability.